good evening. Welcome to another episode of Baatein Bazaar and Beyond. Today we meet another member of the JM Equity Fund Management family, an absolute gentleman, an avid reader, and a pure pleasure to speak with. Please join me in welcoming our Equity Fund Manager, Mr. Chaitanya Choksi. Chaitanya, thank you so much for taking time out to speak with us. So let's just get started. So tell me, what got you started into, or interested in the fund management space in the first place?
Thanks, Akansha, for having me. That is, when I started off from campus, I did my MBA in finance, and we had campus interviews, right? And I remember that my first preference was banking. That was what I wanted at that point in time.
Right.
And my second option was capital markets. Okay. But I guess, destiny or whatever you call it. So I got placed with one of the largest mutual funds at that time through campus placement. And it's been an amazing journey from there on. And I thank God or, my lucky stars that, banking didn't happen and I got to be in this space. And from capital market perspective, throughout my college years, and especially that when I was doing my MBA, that time the Y2K thing had happened, and when I joined, in fact, the markets were in the doldrums.
Right.
But it was something I was always interested in, and from there on, I just started all day. Yeah, exactly.
Wonderful. Yeah. So, during your initial years, who would you consider to be your major influences?
So, as a fresher, everything is new, and though you have conceptual knowledge, I think the practical knowledge is something which helps you throughout.
Yeah.
Because those concepts you will apply it in your analysis, but until and unless you don't do the actual, work in terms of, I joined as a research analyst, and for a research analyst, for a fresher, everything is new. So at that time I was given a few sectors by my senior at that time, and he was quite those formative years, the way to look at sectors, stocks, and how to see the macroeconomy and how that impacts those sectors and stocks. That was a learning experience. And frankly, over the years, my seniors, my bosses have been major influences, and they have sort of helped me shape my thought process in terms of investments and how to look at stocks and sectors. And there are 100 variables, but yeah, I think my seniors I would say, and even my colleagues, right? See, you as a team, you work with a lot of your colleagues, and they have their expertise. We try and form our expertise in whichever sector we cover. And I think I wouldn't give some big name to say that he was my idol, but I would say my seniors and colleagues were. I've learned a lot from them rather than the big names that one keeps hearing about.
Right. But is there any thought leader, so to say, that you follow on a regular basis?
To be honest, no.
Okay.
As I said, I think unless you don't experience, and I've been in the markets for more than 2 decades now, and I think every day is a new day, and there is something to learn, because globally so many things are happening, in our country so many things are happening, and various business models are evolving, and it's one can never stop learning. But in terms of major influences, as I said, I would say that my seniors and colleagues have been quite helpful in shaping and what I am.
So, what is the typical day in the life of a fund manager? What does it look like?
So, right from the moment we get into office, So in the mornings, it's mainly catching up on the news and what's happened in the global markets,
Right.
and some events which in pre-market open we need to know anything major which has happened in whichever sector or economy or whatever. And then subsequently we as a team we have something. It's the morning meeting, wherein the team we all sit together and discuss various stocks, ideas. If anyone has met any company or management or any calls that they have done. So that itself is quite an engrossing session, because as a team, it's a platform where we share ideas and what we think about stock sectors or any major event that has happened. So that's something we do every day, and post that it's something or the other is always happening, right?
Sure,
so markets are on, and but apart from that, we do a lot of corporate interactions, management calls. We speak to our colleagues within the team, outside the team, from the sales side. And during result season, it gets quite hectic.
I'm sure.
And I think now number of companies are increasing, new listings happening. Overall, as we are in exciting times, so there is not a moment that you get bored.
Absolutely. So we are living the Chinese proverb, right? We are living in interesting times.
Yeah.
So that sounds like quite a handful. So how do you manage stress?
So stress is something, if you let it get to your mind, it is stress. If you enjoy what you're doing, you don't feel the stress. So sometimes it may get hectic, but as long as you enjoy what you do and you like what you do, it isn't stress. So it's just that how you manage your time, prioritize things. And as a fund manager, we have various roles in the sense we also interact with our partners, distributors, interact with them, our colleagues from the sales side, company managements. So I think where the day, just how it passes by. If you don't realize it, there is no stress.
Right. All right. That's I think the way to go about it. That's the only way to go about it. So what, in your opinion, is that one habit which fund managers should develop early in their career? I mean, it helps them progress.
So as a fund manager, what I would like to, at least what I've seen till now is discipline in your approach. And that's something very important. Markets, they can get volatile, but I think markets is more of a behavioral finance game, or not a game, but a play, in the sense it's also a lot to do with emotions rather than just numbers.
That's right.
So in fact, something I wanted to do, but unfortunately I haven't been able to do till now is do a course in behavioral finance, because I think human psychology is also at play. And
I would think that the number of people that you meet on a daily basis every day is a study in human behavior.
Exactly.
So,
and then as they say, greed and fear, right? So we've always seen that the worst of times, if you invest, especially in our markets, the best returns have come from there on. So that is one. And secondly, I think taking a longer term view on sectors and stocks is something that will definitely, if you're on the right space, in the right stocks, in terms of, say, managements, corporate governance, everything is fine. And if it's a structural story, the compounding potential is huge. So stick to your convictions. There can be times when you need to sell, but holding on and the returns that you would generate over a 20-year period in the right stocks can beat any short-term opportunities that may come by.
Chaitanya, you've seen the markets evolve in your long association, almost 2 decades with the market. So what have been your major learnings?
So Akansha, I would like to sort of break it up into 2 segments. One is the longer term structural stories, which have compounding potential, and where some event leads to major re-rating in those stocks and sectors. So there, what I have seen is that if we are able to spot those opportunities earlier then maybe the market is underestimating or ignoring something which we feel is going to provide the upside in those stocks. So that is something which, if we are able to do, then you can enjoy the full benefit of that re-rating journey of that stock. And secondly, also what we've seen in cyclical sectors is that if we are able to time the cycle, if so, just for example, say the commercial vehicle sector, right? We know it's cyclical, and there are ups and downs, and there are cycles which follow. So sometimes if we are, when it's in a down cycle, no one wants to look at it. But if we are able to try and get in when it's about to turn, or it just started to turn. So from there on, that you will ride the whole upcycle. So that is also something which we try to do, and that does generate returns. Another thing, longer term, what I have found is that quality managements and companies with great corporate governance standards, they will, never face any issue in terms of, investors doubting their,
Right.
So they always will command a premium.
Right.
And along with that, if the sector is doing well, then as I had mentioned earlier, that's a recipe for very good compounding potential over the number of years,
Right. So along with the markets, I think JF has also evolved to an extent, or to a large extent, over the past 2 or 3 years. So how do you see that? What do you think has worked? How has that progressed?
Yeah, it's been quite phenomenal and amazing, and as we call our version 2.0.
Right.
Yeah, so I guess all the changes have happened for the better, and a lot of new people have joined us, and a lot of effort has been put in by all of us, and we are just at the start of something much bigger.
Right.
That's what I feel, and as a team, I
fingers
guess
crossed.
the new team as a unit has gelled quite well, and we are all working towards a common goal. So I guess, I think it's been really good, and these changes have worked well for us, and we have seen additions across functions, right? And I guess as a unit, I think things have worked well, and I'm sure there is no looking back from here.
Right, absolutely. So you go for distributor meets, plan visits, etc., all of that. What is it that excites you most about this part of your job, which necessarily requires meeting different categories of people?
Right. So that's an interesting question, and to be honest, when we sit here in Mumbai and we talk to people, they say things are happening there, and this sector, because of this reason, is doing well or can do well. But when you actually visit these places and visit plants and see it for yourself, it's more of on the ground research, and we get the opportunity to actually travel and see what's happening around, right? And for example, wherever I have been till now, the road network has been excellent, and so that shows, that tells us that the logistics cost which the government wants to bring down, this is the key enabler for that.
Right.
So this is like on the ground research that you do. You meet a lot of people, interesting people, and that's what is from smaller places, and you get a feel of the place. And if time permits, we do get to do some local sightseeing as well.
Right.
And finally, how can we forget the food?
Absolutely.
Every place has a speciality, which we get an opportunity to enjoy.
No, of course. Why should it be all work and no play?
But I think the people we meet, and this is something we look forward to actually.
Right.
Apart from the work which gets done anyway.
Okay. So let's move to the investment process, investment philosophy side. So could you tell me a bit about your investment philosophy and how it has evolved over the years?
So investment philosophy, actually what we also as a fund house we follow, right? Which we internally call the geek model.
Right.
And this is also something which I believe in strongly, and which it says that, see, our country is a growth economy, right? And we have a long runway for growth in our country.
Absolutely.
So primarily, we are growth investors, and I continue to be very bullish about our country and the future for us.
Right.
I think this is just the start for something great. And so growth, we are primarily growth investors, and that is the key sort of element of our philosophy. Along with that, what we also put a lot of stress on is quality, earnings quality.
Right.
And that flows down from a lot of things. Again, the right sectors and the right management. As I mentioned, corporate governance is something which we lay a very high level of stress on. And apart from that, there are things like how the numbers stack up, right? So we prefer companies which are high on return on equity, and the debt to equity is something which we are very watchful of. We avoid over-leveraged businesses. And something along with all of this is, we get a sort of the corporate governance part, especially, how the management what's the track record, and in terms of execution, if they're able to deliver on that, nothing like it. Secondly, as a philosophy, or what we can say is that if you try to minimize, see, we all make mistakes, right? But if we are able to minimize them and learn from them, that will help us in the future. And over the years, we tend to make mistakes. Anyone would, but as long as your success ratio is, your hits are more than your misses, you just learn from your mistakes and move on.
Absolutely.
And, broadly, I would say. And just one more thing on we typically stress on when to buy, but I think equal importance should be given on when to sell.
Absolutely.
Because if you don't continuously question yourself on this was the thesis or investment argument based on which we bought this stock, but if it's not performing, we need to reconsider. And if we are still convinced about the future, we should hold on. But if there is something going wrong, it's better to then sell and not waste your time.
Absolutely, cut your losses.
Cut your losses. This is something which is one needs to lay equal, if not more, stress on, because then sometimes these investment biases come in. And like I mentioned about behavioral finance, there are a lot of things which that can teach you in terms of we sort of get biased towards a lot of things. That's also true in investments a lot,
right?
Because of that you tend to make mistakes. So I think avoiding those is should be quite important, actually.
Right, absolutely. So I understand where you stand in terms of investment philosophy, but tell me a bit about your process as well. So let's start with the process of the new idea generation.
Okay.
How big a role does the sell side play in this? What is the vetting process that each such idea goes through? Those kind of things. Could you help us with that?
So as we follow the geek model, as I said.
Right.
So we run filters based on that model, and over the BSE 500, which is our benchmark. And based on these parameters, a number of stocks get filtered out. What remains is our sort of universe from which we tend to select our portfolios.
Right.
And the sell side you mentioned, they do help us, they have specialized knowledge in the particular sector that each analyst covers.
Right.
So we also have an analyst team, but on the sell side, it's much more focused on that particular sector. So we do take inputs from them, and they also can give a wide perspective on the sector that they are covering.
Absolutely.
So as a team, they do help us with that in terms of corporate connect, management interactions, plant visits.
Right.
That role, they play quite well. And subsequently, based on the number of stocks which have been, in the universe, we do a second level of analysis. In the sense, within the team, we discuss what's within this what's looking good, and in which stock should we then proceed and do the next level of due diligence. We will always connect with the management before buying the stock. That is something which we do as a sort of rule, because as long as you don't get a feel of the management, in the sense their strategy, their thought process, what's their outlook on the sector, you will not get comfort in buying any stock.
Absolutely.
Meeting them and understanding the business model a bit more in detail helps a lot. And then for final level of number crunching by our analysts and taking a call on the valuation, whether the market is underpricing the upside going ahead. So once all these factors combine, in terms of outlook for the stock sector as well as management integrity and quality, and the final level of our comfort on the upside which is possible based on current valuations.
Right. But so I understand the process of idea generation, but how do you go about position sizing?
So yeah, that's the difficult part actually, because you're right. Sizing can be a factor in your final returns, right?
Absolutely.
So something which is a big winner, and if I don't have much exposure there, it will not contribute as much, right? Yeah, you're right. So typically what we do is we do take exposures which are relatively smaller when we start, based on conviction. We will typically start small, maybe just maybe 1.5 to 2%. And as our conviction grows, we can keep adding to that. Or on the other hand, where something which we are really convinced about, we don't mind going all out and have a substantial stake in that as well. But having said that, on an overall portfolio basis, the risk management is something at a portfolio-wide level is something we are very careful about in terms of, say, the volatility of the portfolio, the beta of the portfolio, and we try and have portfolio beta less than 1, which is fair enough, I guess. Right. As long as we are less than 1, I think the volatility part is taken care of.
Right. So, 2023 has seen a frenzy of IPOs. How do you look at that extreme amount of money which the investors have, actually committed to buying those IPOs? How do you look at this IPO wave, so to say, in 2023?
Yeah, actually, I would like to separate it into 2 buckets. One is where the valuation at the time of listing, the promoters have much more knowledge of their business and outlook than investors, because it's a new company, right?
That's true.
And typically what we have seen is that at the peak of the market, fundraising activity goes up several notches. So sometimes we feel that what the company valuation that they are sort of asking is way out of sync with what the reality is.
Right.
Or I don't want to take names, but say some of the new age companies which came up, and then we know what happened. Subsequently, at some price it can be attractive. We have also looked at some of those and made decent returns. But what I'm trying to say is, at the time of IPO, typically these companies, the financials will be showing a marked improvement over the recent past. 1 to 2 years, the numbers look much better. Right. So you need to be careful and a bit cautious on that. And along with that, there is no track record of the promoter. It gets built over the number of years.
Right.
Unless it's a part of a well-known group or,
right.
Having said that, be cautious, but, the number of companies and the sectors which are getting listed, some very good sectors and, opportunities coming up. I would not like to paint everyone with the same brush. So, like something like, we had some IPOs, a particular one which was a drone company, right? So that is a new segment altogether.
Right.
Now, given the fact that our economy is on the growth path, and we feel that several new, very interesting business models are going to come up. And the only way to participate in those is when they come for IPOs.
Yeah.
So So having, it's like you need to be watchful of the evaluations when they come in, but I think the opportunity itself is, I'm very positive in the sense that the profile of businesses that are coming up.
Right.
So some of them have to be looked at, and you can't miss them. But yeah, I think just be mindful of the valuations that you pay upfront.
Right. So Chaitanya, tell me, you're an active fund manager. Where do you stand on the active versus passive debate?
Yeah, I think that's a global debate as well. And what
True.
we've seen globally is also that a lot of funds are, moving more towards the passive side.
Right.
So what I see is that, global economies, which are developed economies, they are seeing more of this shift towards passives. Now, because of the maturity of those markets, maybe it makes sense for, to invest your money in passive funds, because an active fund manager is finding it difficult to outperform the benchmark.
Yeah.
I feel for our markets, we are nowhere close to that stage, because as I said, the opportunities are huge, and I was just seeing today, in fact, that if I confine myself to those indices, I miss out on all those stocks which are outside the index.
Of course.
Right?
Yeah.
So as of now, BSE 500 is what our benchmark is, and the 500th stock in the benchmark, as per last SEBI classification, is at 5,200 crores.
Right.
I can name, so many opportunities or companies which are below that, which are not captured in the benchmark.
Right.
So I think for an Indian fund manager, the potential to outperform is much more, given where we are in. Right. Secondly, when you benchmark yourself, you are constraining yourself to those defined weights.
Right.
Now, within the BSE 500 also, if I want to outperform, I can definitely be, slightly away from the benchmark in terms of weights in those particular sectors or stocks. I guess that's the way to generate alpha. If you don't try to do that, then beating the index becomes difficult.
Right.
So I think, at least for our markets, I think active is the way to go. I think that's where the alpha is there, at least for the next few years.
So 2023 was interesting. 2024, we've just started. How do you look at 2024? How do you think it's going to progress?
So Akansha, 2023 was surprisingly, the volatility levels in our markets as well as global markets were much lower than what they have been historically. I feel this year the market will be much more volatile than what we saw last year. Now, some of the reasons for that is the uncertainty on the timing of the rate reduction cycle from the Fed, when it will happen. There are many estimates there. Secondly, we also have our general elections coming up sometime May, June this year. So that can cause some volatility based on some events which can happen before that. But broadly, I feel that, as a trend for our markets, there can be a period of consolidation given the returns we saw last year, especially in the small and mid-cap space. So I think there can be some consolidation there, which I feel should happen in the sense that it cannot be a one-way rally, for our markets. So,
absolutely,
your time correction sometimes is also important, so that so earnings catch up with the valuations. We feel the earnings will deliver. So yeah, I think broadly it should be a good year, and longer term there is no reason why we should not do well. So for an investor, I would suggest that don't try to time the market, because I feel that's one of the biggest mistakes that we tend to make. The longer you are in quality stocks, quality mutual fund schemes, I think your return potential and compounding potential will go up to that extent.
True.
So broadly, yeah, I think it will be a good year. Apart from these, events which are supposed to happen this year, even the US elections are lined up later this year. So maybe something from that side as well can lead to some volatility.
Right. how do you see our own industry, our fund management industry, evolve in the coming years? How big a role do you think technology is going to play? What could be some other parameters which could be game changers in this industry?
So the mutual fund industry, I feel, there is a long runway for growth. Given the financialization of savings that we are seeing in the economy, right? We have seen the flows that have come to mutual funds over the last few years. And as an economy, we will continue to grow. And I feel that equity as an asset class within financial savings and overall savings, its share has to go up for sure. Because the younger generation, I feel, I don't think they would be too keen to invest in gold and real estate and, all those avenues. And given that our earnings outlook over the next few years continues to be very good, so as an asset class, equity should do really well. And within that space for our industry, I think we are just, the runway for growth ahead is long runway, and outlook is very bright. Now, in terms of technology, I feel that they can enable your investment process. I don't think they can take over the investment process.
That's very true.
So, they can definitely help us in improving our modeling but I'm not sure if they can rightly tell us what to buy and what to sell at which time and, the softer aspects of analysis, if you call it. So maybe quant-based models will come up. I don't know how successful they will be. Maybe they will have their own space. But I guess at the end of the day, the human touch is involved in terms of managing people's money.
That's true. I think those are all my questions for you, Chaitanya.
Okay.
And I'm so grateful that you took time out to talk to us.
Thanks, Akansha, for having me. It was lovely talking to you.
Great. Thank you.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.